Hey everyone. So today we're going to talk about the fascinating world of accounting. Now, before you switch off thinking that this is all going to be about spreadsheets and accounting jargon, I just want to reassure you that we've started these videos because we know that accounting is actually at the heart of everything. And if you are training to be a bookkeeper or an accountant, or you're thinking about that being your future, or you're running your business and you want to understand more about your numbers, these are the really important parts, the fundamentals of accounting that you need to know. And I promise you, this isn't going to be boring. Now, accounting, as I said, is really at the heart of everything. In fact, it's part of your day-to-day life with your finances, as well as if you're running a multi-million-pound business. But if you're just trying to stick to your monthly budget or look after the accounts for a small business, accounting is going to play a really important role in shaping the decisions that you make about money that you spend or how you finance certain decisions that you're making, and really giving you clarity about where you stand right now and what you need to do next. So in this video, we're going to explore what accounting really is. This is your very first lesson in your accountancy basics. I want to help you understand how accountancy impacts your personal life and your business, and the vital role that it plays in communicating financial information to those people who need it. So first of all, what is accounting? Well, at its core, accounting is the process of identifying, recording, classifying, and summarising, and then communicating financial data. It's about the numbers that show us what's going on. So from how much we are earning to where the money has actually gone. The official definition from the American Accounting Association describes accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. So it's all about identifying transactions, measuring transactions, communicating those transactions so that people can make decisions based on that information, whether there are people involved in the business or people who make decisions on or behalf of the business. Now, accounting has an everyday impact. It's not just for businesses. Think about the times that you've seen accounting in the news, or scandals or fraud, financial information, updates, profit forecasts. This affects everybody's everyday life as well. It's personal. So think about budgeting if you want to bring this back to home. Just like the way that you track your income and your spending so you can avoid being in a difficult financial situation or having a financial surprise. So whether you're saving for a holiday or paying off a debt or a credit card or planning to buy a house, you're already using basic accounting principles. And actually, when we're in these early days of understanding what this accounting jargon, if you like, means for business, we're going to use a lot of comparisons to everyday examples, because I think it's so much easier when you can bring this back to personal life and understand how these things apply to you too. So we're going to scale that up to a business. Accounting allows organizations, some private companies who are there to make a profit, some charities or public bodies who are there to provide a service to the population, large organizations, small organizations. Accounting is going to help all of those to make informed decisions about hiring or investments or what to sell or what to charge or how to grow. Without accurate information, accounting information, households and businesses risk losing control of their finances. Who has gone into holiday season buying all the gifts and not kept track? If you've ever been in that situation, it's because you haven't been measuring and recording those transactions. It's exactly the same for businesses. Now, bookkeeping versus accounting. What is the difference? This is a question that comes up all the time. And people often confuse bookkeeping with accounting, or they can't quite see where one ends and the other starts. And actually, in this world where everything is digitized and we are working in a very different way, even just over the last few years, there is a much closer connection between the two roles, but they are still two distinct roles. The way that they play out in small business, there's a lot of overlap now, but when you think about what a bookkeeper does and the kind of accounting that we talk about when we talk about corporate large business accounting, they still are very different things. So let's just clear that up. Bookkeeping is the process of recording all financial transactions. It's about logging the details like the sale, the purchase, the expense, who was the sale made to, where was the money actually spent, and it's all recorded in a systematic way. We follow rules when we're bookkeeping. Accounting, on the other hand, builds on that bookkeeping. It classifies and summarises those records. So the records have to be good, the bookkeeping has to be good, and then the accountant follows rules to analyse the data and communicate insights so that decisions can be made. Now, those might be reports that are required legally, but it might be information that is communicated to people who are interested in the future of the business so that those leaders can make decisions about what happens next or what direction the business goes into. Think of bookkeeping as laying the foundations and then accounting as like constructing the building. You can't have one without the other. So let's talk about the process, the bookkeeping and accounting process. The process is about classifying, summarising, and communicating. And once financial data has been recorded, it needs to be organised into categories or classified. So, for example, income, expenses, assets, and liabilities need to be grouped together because they mean different things. Your income and your expenses are two sides of a story in terms of how profitable you've been. Your assets and your liabilities are two sides of the story in terms of what you're actually worth, what is your net worth. So we need to group those different assets and liabilities, income and expenditure into different groups so that we can make sense of the data. Next, we come to summarising, and that's where accountants condense this information into financial statements, and we can actually give you a view at a moment in time of where you stand on those income expenditures or the assets and the liabilities. And we produce things called financial statements, which are, for example, a profit and loss account, which shows you your profit or your loss, or a balance sheet, which shows you your assets and liabilities, or something called a cash flow statement, where we tell the story of what has happened to the cash flow in the organisation. Now, these reports are kind of summaries that provide a really clear picture of the financial health at a moment in time of that organisation. Finally, of course, that data needs to be communicated to users of the financial information in a way that is accessible and actionable, remembering that not everyone is a bookkeeper or an accountant. So the jargon that we tend to use isn't always very helpful, and we need to have this kind of information communicated so that we can understand what it really means for the business. So let's just talk about who uses accounting information. There are lots of different users of financial data, and they're going to care for different reasons. Now, you might have your own interests in particular businesses and their performance because you might have investments in a pension, or you might have an employer, and that employer, their financial security is important to you because they're the people who are paying your wages. So we all have different interests in the future of a business, but let's just give some examples. So business owners. Somebody who owns a business needs to know whether their business is profitable and sustainable. They need to know whether they've got a future. A prospective buyer. If you're thinking of buying a business, you need to look at the accounting data to decide whether that business is worth investing in. Banks and lenders, they're going to be interested in financial records to understand whether that business is going to be able to repay a loan when they're going to take out finance. HMRC or your government or your tax authority, they are going to require accurate financial information to make sure that you're complying with tax laws. Suppliers and customers, they might look at the financial stability of a business before committing to deals. As a customer, are you going to buy, let's say, a car from a business that looks like it's about to go bust and won't be able to support you with the warranty that you think you're buying? If you are selling goods, is it likely that the business that you're selling to is actually going to be able to pay the invoice to you? You need to understand that when making those kind of decisions. Investors are interested in evaluating financial performance so that they understand what's going to be happening in the future. You don't want to be investing in something where you're going to lose a load of money. And the public, especially for large companies or health organisations or local government organisations who are supporting the wider economy, we need to understand as a population the financial health. This is much more about accountability and making sure that the right things are being done in terms of finances and public finances. Now, each user is going to rely on the accounting information to answer different kinds of specific questions. For example, Is the business growing? Is the business solvent? Can the business be trusted to meet its obligations? Accounting is really crucial because it paints a picture of financial reality, and it's very difficult to describe in words sometimes what a business looks like, and that's why these numbers are really important. Without seeing this data, these numbers, the information on a page, individuals and businesses would struggle to make informed decisions or spot potential issues, or actually to seize opportunities. So there you have it. Accounting is the backbone of understanding planning and achieving financial clarity. In this video, we've explored what accounting is, how it impacts both our personal lives and business, and the difference between bookkeeping and accounting. We've also covered the key steps in accounting, which are recording, classifying, summarising, and communicating, and why those are so important. And finally, we've discussed the main users of accounting information and how they rely on it to make crucial decisions. If you enjoyed this video, leave us a comment, let us know, and don't forget to like and subscribe to stay updated. See you next time.